Good morning, students. Welcome back. So today we plan to start with another topic and chapter 10, chapter 11. That is what we plan to cover, right? So I'll just move on to this chapter number 10. Okay, so this is about review. Interesting chapter in terms of the topics it covers. So let's try to understand as to what is it that we are required to look into as far as the auditing standards are concerned. So this chapter covers two auditing standards. Okay. In fact, you can call it as review standards also. Yeah, largely in line with quality control, quality engagement and quality control standards. SRE 2400, SRE 2410. Okay, so these are the two. Now, as regards these two standards, these are in relation to review. So now here again, we are not looking at audit. Okay, something that we also saw in case of our discussion in the previous session. Means here again, we are not going to audit the data, okay, or the financial information. So it will be now a different scope. And what is going to be the scope? So it will be review. So the now important part is to understand how is this review different from audit? Yes or no? Yeah, so that is something we'll have to look into. So we'll just first of all try to understand the meaning of review. How is it different from audit? Once we have that clarity, that is when we'll just pick up both these standards, because one deals with the review of historical financial statements, other one is in review respect of interim financial statements. Okay, right? All right. So now, what is a review? So when it comes to a review, we can say that unlike audit, what is the objective? Objective is not to provide the opinion. Okay, so here again, auditor will not provide any opinion. So what is it that the auditor will provide? Auditor will provide conclusion. Okay. Therefore, auditor will also be doing limited work. You can say as comparison to what he'll do in case of audit. Now, what is the meaning of limited work? Limited work means the procedures that he will perform in case of audit. Now, those are going to be lesser. Why? Because in this case, even if you look at the assurance level, so that assurance level will also go down. So we can say there are three ways you can look at the assurance level. One is absolute assurance. Do we have absolute assurance in case of audit? Tell me.
No, sir.
No, we do not have. So in case of audit, what type of assurance does the auditor provide?
Reasonable assurance.
Reasonable assurance. So that means from the absolute assurance, auditor has already brought it down to reasonable assurance. And that reasonable assurance happens to be a high level of assurance. Now that is further brought down. You can say we are going down one level from reasonable to limited assurance. Now, what is this limited assurance? You can say it's not the high level of assurance. It's a level lower as compared to what you have in case of reasonable assurance. So now this limited assurance is what you have in case of review. And that's why, because the extent of testing is required to be lower. Why? Because the assurance is now going to be lower, because the audit procedure, sorry, because the procedures are going to be lower. So that's why the work is going to be reduced. Yeah. So we can say that this is how we can differentiate between audit and review. But there again, a question may arise that it's fine that testing is going to be lower, procedures are going to be lesser, but what procedures will not be performed? Means what do you cut down? So if somebody asks that, okay, it's fine that audit procedures are going to be lower, extent of testing again is going to be lower, but what is going to be reduced? Means what will be cut down? So how do we look at it? So that is what we have to understand now, that what is going to be reduced, what is not required to be done. So let's look at one example. So this is what we have in case of audit, let's say. Okay, so let's suppose we have, just give me a minute. Let me just open another file. Just give me a minute. Okay. Just a minute. Let me now share this document with you. All right. So now we have audit and here we have review, right? So now when it comes to audit, there are two things you will generally do in case of audit. We can say test of controls, number one. Number two will be about tests of details, or you can say substantive testing, which will also include analytical procedures, test of details. Then you will also have analytical procedures. Correct? I'm just not ignoring the planning and all. See, the planning and all of those things will be there. I'm just talking about more of the field work which the auditor will be doing. Okay, when it comes to the audit. Now, when it comes to the review, now because the level of checking is going to be lower, so that's why now the auditor will not be focusing on these two things. Yeah. So what is it that he'll do? He'll be focusing on analytical procedures. Or you can say he will be looking into substantive analytical procedures. Now, what is the meaning of substantive analytical procedures? Can somebody explain? What do you have in case of substantive analytical procedures? What do you do over there? Over to you. Any thoughts? Quickly. Tell me quickly. What is the meaning? What is the understanding that you have in case of substantive analytical procedures? Quickly. Anyone?
So sampling will be covered here.
Okay. What else? All right. So let me now change this. Let me just ask you, what is your understanding of analytical procedures? So what do you call it as? Means what do you cover? How do you perform analytical procedures? Can somebody explain?
Sir, comparing and checking trends.
Very good. Comparing and checking trends. What else do you have? Tell me quickly. All right, so let's understand because this part becomes important. First of all, one thing which you need to understand is that analytical procedures is not something which is only in relation to review. So that's why it's very important. So something which you are missing out on is analytical procedures. So you should have a clarity on this. Now, what is the meaning of analytical procedures? Let's suppose when you go understand the controls. Okay, then you will pick a few samples. You will check that. What do you call it as? Tests of controls. Means you are picking up some samples. You are doing the checking. Similarly, let's suppose sales is required to be verified. Payroll is required to be verified. So what will you do? You will ask for different details from the company. And you will check that. Whether you are checking invoices, whether you are checking some calculations, okay, whether you are checking the valuation, all of these things, how do you do? By obtaining the details and verifying them. Now, this is what you generally call as testing or testing of details, which is also called as substantive testing. There is another set of procedures which the auditor performs, in which case he will not be looking at data. He will not be looking at details. Generally, details means the underlying information, means invoices and all. In this case, what is going to be the focus? Focus will be to analyze the data. Instead of just checking that, he will be analyzing the data. Now, what does it mean? Say, for example, previous year, current year. Previous year sale was 100, current year sale is 110. So what can we say? We can say sale has gone up by 10%. Yes or no? Now in this case, auditor has analyzed the sales data. Now this sales data which the auditor is trying to analyze, he may want to now break it down to further analyze. So auditor may consider breakup of this 100. Breakup as in breakup in terms of quantity, breakup in terms of price, because that's how the amount will be derived, yeah, for both the years. And then he may compare that in terms of volume, what has changed in the sales in the current year as compared to previous year. Similarly, in terms of sales prices, what has changed in the current year as compared to previous year? Yes or no? Now, this level of analysis which the auditor is doing, do you see any verification in terms of the documents, agreements over here? Tell me. Tell me. Quickly, over to you. Do you see any level of verification involved? Any level of examination involved? Means in terms of the supporting documents?
No, sir.
Tell me quickly.
No, sir.
So,
No, sir.
as an auditor, do you perform this procedure or not?
No,
Do you
sir.
do this or not?
No.
As an auditor, do you do this?
Yes, sir.
Yes or no? I'm not clear.
Yes, sir.
Yes, we do this. So now, this you can say is one of the analytical procedures. So in this case, what are you trying to do? You are trying to analyze the data. You are trying to look at the trends. You are trying to analyze the ratios. You are comparing that. You are doing different assessments on this data. Okay. So this is what you can say is an example of analytical procedures. Now, in this case, let's suppose quantity in both the years has remained same. Let's suppose you look at the quantity and you found that the quantity in both the years is same. So there's no change in the quantity. So why did this sale go up? This went up because the prices increased. Okay, so what will you do? You'll take this information from the management. You'll compare the data. You'll do this sort of analysis. So then you go to the management, the client personnel, you ask them these questions, why this 10% has gone up. So they have explained that the quantity has remained same, but during the year prices have increased. So you are involved in more of inquiries in this case because your objective was not to check. Yes or no? So you obtained the data, calculations you did on your own, but then you ask the management, why is it changed? Okay, so it's an inquiry you have been performing. So it's more of inquiries you are doing in this case. So they explained you. Okay, now in this case, can you just simply rely on the explanations that you receive, the inquiries that you perform? Answer is no. So what does it mean? That will you now get into the test of details, test of controls? Of course, if it's an audit, you'll do that. But if it's a review, you will not do that. Because in case of a review, your objective is to work lesser. Correct? So what will you do? Just to substantiate that whatever the personnel or the client personnel has explained, whether that is correct or not, you may just ask them that, can you show me one agreement wherein I can see the sale prices have increased as compared to the previous year? And by doing that, what are you trying to do? You are trying to substantiate this information. So you are substantiating this information by looking at the underlying data, but your objective is not to test various samples. Your objective is only to substantiate this. If you do that, what do you call it as? Substantive analytical procedures. Okay. So in case of substantive analytical procedures, you are not only analyzing, inquiring, you are also looking at the underlying data to substantiate the outcome or the explanations, to validate, so that you can draw the conclusions on the basis of this. And in this case, can we say that the testing of controls, testing of details cannot be done? Of course, it can be done wherever the need is felt, wherever it is felt by the auditor that he needs to do this. Okay, maybe he wants to go beyond that. But of course, he'll not be doing that for each and every item of the financial information because that's not the objective. That's not the scope as well. But that doesn't stop him from checking some of the areas by testing the details. Understood? Now the comparison between these two. Now, are you clear on these two? Everyone? Tell me quickly, everyone clear as to what is audit, what is review,
Yes, sir.
and
Clear from my side, sir.
how are these two different?
Yes, sir.
Yeah.
Yes, sir.
Now, because the level of checking is lesser, so that's why auditor will not be able to give reasonable assurance. Auditor will be able to provide only limited assurance. Yeah. So now, let's talk about SRE 2400. Now it requires review of historical financial statements by a practitioner who is not the auditor of entities' financial statements. Okay. Now, in this case, because it's a review, so that's why what will you have? Limited assurance. Correct. And because it's a review, so definitely some level of reporting will be required. No doubts about it. Okay. Now, can we say that review is an assurance engagement? Tell me. Tell me quickly. Can we say that review is an assurance engagement? What are
No,
your
sir.
thoughts?
No, sir. It's not assurance engagement.
Okay. What about others? Quickly.
Sir, limited assurance.
No. So you have to say yes or no. So there's no third option I'm providing.
No, no, sir.
Yes, sir.
Okay. Somebody mentioned yes. Can you please
No.
explain why you're saying it's an assurance engagement? Quickly. Why it's an assurance engagement?
Only detailed checking are we are not doing, but we
Right.
have to give limited assurance.
No, so what is your answer? First of all, tell me what is your answer? Yes or no?
Sir. Yes,
Now
sir.
you're not speaking.
Yes,
Yes or no? Quickly.
Yes. Yes,
Okay,
sir.
it's an assurance engagement. Very good. So now you can explain why you're saying it's a yes. So that we can understand the context. Huh? Tell me.
Because like audit, we have to do in review in it, but not detailed review means audit, but it is a limited assurance we have to give that we have checked the historical data of the company financial statements.
Right. Okay. Anyone else who would like to add to this?
Sir, here we are not auditing. We are reviewing. So that
Okay.
it is not a assurance.
Okay.
Just we engaged as a review function. So here auditor is not giving that report. Opinion is not provided. Only he is providing the conclusion of it.
Very good. So can we therefore say on the basis of whatever you have explained so far that audit and assurance are one and the same thing? In a way, it means that, isn't it? If we go by that understanding, then we'll have to say that assurance is nothing but audit. Will it be right to say that? Tell me quickly.
Yes, sir. Audit is nothing but giving the assurance.
No, I'm saying audit and assurance are one and the same thing. There's no doubt audit is an assurance. But to say that audit and assurance are one thing, yes or no? That's what I'm asking you.
Yes, sir.
No, audit and assurance are not one and the same thing always. Or you can say that assurance is not limited to audit. Assurance is a wider term. which includes audit. Okay, for example, somebody, what Geeta, so sorry, I think Geeta has explained this point, that in this case, auditor is not playing any management function. What is assurance? Assurance is something when the practitioner comes in, verifies some information, performs the procedures, whether it is related to verification, examination, testing, analytical, anything he'll do. And he is required to report on that. And that's where, whenever you provide assurance, what do you need? You need to be independent. Something that we discussed in the previous session also, that whenever any sort of checking is involved, verification is involved, and the auditor is required to report upon that on the basis of his checking. Okay, again, I'm just using this limited term checking. What do you call it as? Assurance. And please remember, assurance is not limited to audit. Audit is, of course, assurance. There's no doubt about it. But assurance is not limited to audit. Why? Because audit is an example of assurance. So what can therefore assurance include? Review is also assurance. When you are issuing certificate, means certification is also assurance. Clear on this? Yeah. So therefore, when it comes to audit, wherein you provide opinion, you will definitely say it's an assurance. But wherever you provide review, wherein you are providing conclusion, that is also an assurance. The only thing is that the assurance level is lower. In fact, in this case, we have already talked about it. Reasonable assurance, limited assurance. So assurance is there. Yes or no? Assurance is there. The only thing is its level is gone down. Clear? Everyone clear? Yeah, everyone clear now?
Yes.
Very good. So I think there are few aspects that we have covered today which are very, very important. I believe, for example, analytical procedures, assurance. What is the meaning of assurance? What does it include? And you can very well have questions on this. Yeah, so I think it's a good point that we have discussed some of these things. But again, very, very important for your understanding, right? Now, let's come down to our discussion on this particular standard. So as we discussed, it's about review. So in case of review, what will you have? In case of review, you will have inquiry procedures. Okay, that is again a dominant part which the auditor will do. Now I'm using the term auditor because at times you may have auditor, at times you may not have auditor. Of course, for this particular auditing, for this particular standard, you do not have auditor, but I'm just using this term. So do not get confused by that. Okay, so of course, in this case, the auditor is not supposed to do this, but when it comes to SRE 2410, the next standard that we are going to pick up, therein, of course, the auditor is going to be involved. Okay, but in both the cases, because it's a review, so that's why our discussion, you can say, is quite common for both the things. So there's no separate discussion that you will have, because in both the standards, SRE 2400, SRE 2410, the kind of procedures are going to be exactly similar. The only thing different will be what? The only difference will be the underlying information. In case of SRE 2400, you have historical financial statements. In case of 2410, you have interim financial information. Interim means quarterly financial results, 6 monthly financial information. So when it comes to the listed companies which are required to produce their results every quarter, so what do they have? Every quarter an audit is not performed. Every quarter a review is performed. Generally, okay, what is this is what they mostly opt for. So as we discussed, that the dominant part of the procedures by the practitioner or the auditor when it comes to review will be what? Will be inquiries. Okay, so that's again a very, very important area and a dominant part. Second will of course be the analytical procedures, something that we just discussed as to what are analytical procedures, how they are required to be performed. Okay. When it comes to analytical procedures or the inquiries, at the first level, they will not involve any sort of checking with the management in terms of the details the management would have prepared, in terms of the underlying information which is there, means supporting documents. But of course, the auditor needs to substantiate that. So that's why it will not be limited to analytical procedures. It will be substantive analytical procedures. Then there are, of course, going to be some critical areas which the auditor will have to look at. Related parties, okay, the risk assessment that he would have had, because again, it's an assurance engagement. So some sort of planning he would have done, risk assessment he must be having. So now in terms of that risk assessment, any risk which is related to fraud. So all of these factors he'll consider, and all of those compliances which the company would be having, he will have to cover that as a part of his or her audit, his or her procedures in relation to review, right? Going concern again is one area that he needs to look at. Use of work performed by others means if let's suppose any expert is involved, so he'll be required to review that work. But here again, the objective is what? Review. Okay. Now, as far as the review is concerned, so we have understood as to what are going to be the procedures and what are not going to be the procedures. But please understand, there is no capping which the management can have, that this is something you'll do, this is not something you'll do. Of course, wherever the practitioner or the auditor decide, they believe they need to go beyond the analytical procedures, they want to check maybe some of the information, so they can definitely do that to reach the conclusions, because of course here again the conclusion is required to be given. Now in this case, the terminology that we are using is conclusion. So that's why, similar to what you have in case of opinion, you will have modified conclusion or unmodified conclusion. Unmodified means it's a clean one. But in case of modified, you will bring in the modification. Okay, now what are going to be the modifications? So we have got same modifications. Qualification could be there. We can have adverse conclusion. Then we can also have disclaimer of conclusion. Right? So modifications in a similar manner could be there. Right? And it is not necessary that it will always be a clean thing. Means it will always be unmodified conclusion. No, it can always be a modification, depending on again the misstatements which could be involved in the financial information which is getting audited. Sorry, which is getting reviewed in this case, right? Now, let's also try to understand as to how this review report will look like. So we'll have a title. Again, same way to begin with. I think you have looked at the audit report, correct? So in a similar manner, you have this review report. Okay, so let me just do one thing. Just give me a minute. Okay, so what I've tried to do is I've just tried to pull out one limited review report, and on the basis of the discussions that we have had, we can also look at this actual review report as to, what do you have in case of this actual review report, right? Now we are interchangeably using this sort of discussion for 2400, 2410. So do not get confused. Okay, so I'll just share this report and we can just look at this as to what will get into it. So in this case, there is a limited review report on unaudited standalone financial results for the quarter ended 30th June 2024. Fine. So it's addressed to the board of directors of the company. Okay. Then you have this, sort of explanation as to what is it that the auditor has done, right? Wherein he will include everything as around what the auditor or maybe the practitioner has done. So the practitioner says we have reviewed the accompanying statement of unaudited financial results for the period being submitted by a company pursuant to the requirements of SEBI. Then there's an explanation as around the basis. So this statement is all about financial results, which is the responsibility of company's management approved by board of directors, has been prepared in accordance with recognition and measurement principles laid down in Ind AS 34. Why? Because it's about the interim financial information, because it's prepared for a quarter, so that's why it's interim. Correct? Then he's just explaining over here. Now in this case, practitioner says our responsibility is to express a conclusion. Okay? Yeah? It's not an opinion, it's a conclusion. Then the practitioner or the auditor says we conducted our review in accordance with SRE 2410. Then auditor is also explaining what is a review. So it says a review of interim financial statements or the information consists of making inquiries, primarily of the persons responsible for financial and accounting matters, and applying analytical and other review procedures. Okay. So the auditor is clarifying in the report itself what all procedures he is required to perform. So why is it clarified? So that the stakeholders get to know. It's not a full audit. Further, let's also understand, it says a review is substantially less in scope than an audit, and consequently doesn't enable us to obtain assurance that we would become aware of all significant matters that might be identified in an audit. Accordingly, we do not express an audit opinion. Can you see this? Yeah? Are you getting this clarity? Okay, so he's just also trying to explain the difference. See, the way we have understood the difference in this session, you can say it's a sort of training. Yeah, it's a class which is going on. But here again in the report itself, auditor is providing this complete clarity. So he has explained everything, he has covered everything. He has included the difference between audit and review in the report itself. So you may be thinking that, is this really required? Yes. Then he is providing the conclusion. Now comes the conclusion. So auditor says, based on our review conducted as above, nothing has come to our attention. See, when it comes to limited assurance, so auditor is not saying that the financial statements provided true and fair view. Auditor is simply saying that nothing has come. So it's a negative language auditor or the practitioner will use. Nothing has come to our attention that causes us to believe that the accompanying statement prepared in accordance with recognition and measurement principles and other accounting principles has not disclosed the information which is required to be disclosed including the manner in which it is to be disclosed or that it contains any material misstatement. Okay, so auditor is simply saying that as far as our understanding is concerned, nothing has come to our attention due to which we can say there is a mistake. So auditor is not saying that we confirm there is no misstatement. So it's a negative language auditor is using. Okay. Then the last part is about the financial information. Again, comparative financial results of the company for the corresponding quarter were reviewed by another auditor. So something that you have in case of other matter paragraph in the audit report. So there again, because the previous quarter was reviewed by somebody else. So auditor is just simply clarifying that. And the auditor also says our conclusion is not modified in respect of this matter. Then the auditor will sign off. Okay, so they will sign in a similar manner. The way audit report is signed, UDIN will also be there, place, date, all of these things will have to be specified. Yeah, everyone now clear what is a review? What is required to be done in a review?
Yes, sir.
Tell me.
Yes, sir.
Yeah,
Yes.
great. All right, so now quickly, I think some of the ingredients of this report, review report, we have really looked at. Okay, so now review is a review. It could be in relation to any information that you may have. And as we discussed that when it comes to review for the historical financial statement, something which you have in case of 2400. So what do you have? You have this requirement related to a practitioner other than the auditor. And when it comes to 2410, therein you have the auditor. But because the auditor is required to do a review, so that's why the auditor will be issuing a review report for the interim financial information. Because when it comes to the full year financial information, that becomes the financial statements for which the statutory audit will have to be performed. Okay, so that's why 2410 specifically talks about interim financial information by the auditor itself. Now, I would say this part is important. Yes.
Yes, sir, because since it is not a statutory audit, because since it is a review, so the auditor has not to perform, has not to follow any provisions of the Companies Act.
What are those provisions?
Like the fraud requirement, section 143(12), or the other things.
See, whatever is required in case of financial statements for the year, or you can say whatever is required specifically to be reported upon by the statutory auditor under an audit, only those things will not be required for interim period. Okay. So review is not require, or you can say in case of a review, you will not say that I'll not be looking at the compliances, whether the compliances have been fulfilled or not. Why? Because if there is a non-compliance which could have a financial impact, then of course your conclusion may have to change. Yeah, so even in case of review, you will be looking at material misstatements. Otherwise, how will you understand whether you need to give a modified or unmodified conclusion? Okay, so that's the case. But yes, of course, some of the things like IFC report, CARO report, okay, the section that you have on other legal requirements, other information which goes along with the financial statements. Okay, some of those sections in the audit report that you have, those you will not have in case of review. Okay.
Yes, sir, clear.
In fact,
Sir,
what I would suggest is, just a minute, what you can also do is to get some more clarity on this. Maybe you can just pull out two reports, audit report and review report. So you can just do Google and get it. We have also looked at the actual reports. And you can just understand as to what all sections you have in case of audit report and what all sections you do not have in case of review report. So that's how you will get absolute clarity. Okay. Yeah. Yes,
Okay.
tell me. I
Sir,
think
my
there was a
question was,
query.
yes, sir. My
Yes.
question was, in case of review, fraud and non-compliance with the law is applicable, then, sir, reporting under 143.12 is also applicable, I think, sir.
No. See, when you go to Companies Act or when you go to any law or regulation, you need to find out under that particular section, okay, or under that particular rule or regulation as to when is that reporting required to be done. Is that required to be done at the time of audit or at the time of any report, including the review? Okay, so if the section will require, if that particular provision or the law will require that whoever is the practitioner, statutory auditor or otherwise, and whatever be the report, this needs to be reported upon, then of course review report will have to have a section on that. But when you go to that particular section, okay, maybe you can just revisit that, so you'll get to understand about it. Clear? So that requirement will come from the law, not from the auditing standard. Yes or no? Remember, in case of audit report, we discussed that there is a separate section on the other legal requirements. Why do you have that? Does the
Yes, sir.
auditing standard require you to do that? No. That is required because the Companies Act asks you to do that. That's why you have this separate section in the audit report to take care of the requirements which the Companies Act requires. Clear?
Yes, sir.
Okay. So review standard will not give you this answer. Got it?
Yes, sir.
Any more questions? Any more doubts? Quickly. No? Everyone clear? Sure? Yeah, everyone clear?
Yes, clear, sir.
Okay, very good. So let's quickly look at these differences because I believe these are very important. And these differences, I would say, instead of just mugging up, you should try to understand. The moment you have a clarity between the as around these differences, you can say that you have understood the concept. So audit is reasonable assurance, review is limited assurance. Because it's reasonable assurance in case of audit, so that's why you perform elaborate, extensive procedures, including control testing, test of details. But when it comes to review, you'll do fewer procedures, wherein you will not be looking at control testing, testing of details, until unless that is considered important. When it comes to audit, you'll draw conclusions on the basis of sufficient appropriate evidence. And those conclusions will be reasonable. But when it comes to review, again, it's a limited assurance. When it comes to audit, you are providing assurance opinion, which is worded in a positive language. Means you are not saying that nothing has come to our attention. Okay, so it is positively worded. But when it comes to conclusion, it is negatively worded. So you start with that nothing has come to our attention. So that is negatively worded. Yeah. So that's how it goes. Clear? So now what we can do is we can just look at some questions. So let me just open those set of questions for you. All right, so let's look at this. Roma Limited has entered into a contract with Dorma Limited. There's a condition in the contract by virtue of which Roma Limited is required to get its financial statements reviewed for an year on a quarterly basis in accordance with financial reporting provisions of the contract. Can Roma Limited get its financial statements reviewed from a professional accountant in practice? Over to you.
Yes, sir. In this case, it is applicable.
So your voice is very low. Quickly.
Yes, sir. Roma Limited is entitled to review their financial statement by others professionals.
Others, what do you mean by others?
That means not required auditor
Means other than statutory auditor.
Yes, sir.
Okay. So when you say that it can be done, so can you also refer the auditing standard which will get triggered here? So which standard you need to go and refer?
2400.
2400. Very good. So in this case, which standard will get triggered? SRE 2400. The above financial statements are prepared in accordance with special purpose framework. Yes or no? Why do we say it's a special purpose framework? Can you please explain? Tell me quickly. Can you please explain? Why it's a special purpose framework? Yes.
Sir, this is a financial reporting provision of the contract. Hence, it is a special purpose framework.
Very good. See, in this case, you are not preparing the financial statements as per the statutory requirements. Of course, company will have to do that, but we are talking about a different requirement. So there's a specific purpose. When you are doing something for a specific purpose which is different from what the statute requires, what do you call it as? It's a special purpose. Now, financial statements which are prepared in accordance with special purpose framework. Now the company needs to decide as to what do they want to do. Do they want to get that audited or do they want only a review? So if they want only a review, then as per SRE 2400, this review can be performed by a chartered accountant in practice who is not the auditor. Okay.
Here, sir, 800 is also applicable, sir.
Yes, but 800 will apply when you are getting into audit.
Sir, this is not the audit. This is a review. Hence, the 800 will not applicable.
Correct. Okay. But so that's why 800 will apply when it comes to audit. Otherwise, you will mix up two things. So 800 may apply.
Okay.
Why? Because it's a special purpose framework. But then it will have to be an audit.
Yes.
Okay. Then the scope will have to change. Clear?
Yes. Sir.
So do not mix up two things. 800 is not about special purpose financial statements always. 800 is also about this aspect related to the scoping. So I can see this query coming up. Ashok, can you please look at this? I think Janvi is sending a message. I want WhatsApp group link as I am new to the lecture. Yeah, so please look into this. Huh? Okay, so I'll just go back. You are conducting a review of financial statements of a company. It is gathered upon inquiry that there is a possibility of material misstatement in that financial statements. Discuss how you would proceed further in this matter under SRE 2400. Now it's a good thing. Huh? Here again, what has happened? The relevant standard has been explained to you by the question itself. Yes or no? Tell me. How would you proceed? What do you do in this case?
Sir, generally in SRE 2400, the auditor will do the inquiry and get the representation. Based on that, he will do the audit. He will do the review.
Okay.
But when he find the material misstatement in the
Right.
financial statement,
Right.
he will do the analytical procedure.
Otherwise, he'll not do. Are you trying to say that?
See, when there is a no material misstatement, then he will not do that analytical procedure. When he find
Okay.
the material misstatement is exist on the financial statement, that
Right.
time he will do the analytical procedure.
Okay. Anybody else who can just add to this? Anyone else? Any more thoughts? Any different thoughts on this?
Sir,
So analytical procedure is compulsory in it. We have to inquire everything and do analytical procedure. But if material misstatement is there, then we have to see whether it is pervasive or not. As per that, we will give qualified conclusion or adverse conclusion.
Very good. So now when it comes to a review, please understand, I can see some sort of gaps today. Okay, particularly in some of these areas related to review, analytical procedures, which is very, very important for you to bridge. Hopefully, those are also getting bridged today. But I would also request you to please go back and go through the complete auditing standard. That will also help you, okay, in getting complete clarity as around all of these things, okay, as a part of your further revisions. See, in case of a review, auditor is not required to perform substantive testing. Means test of detail, test of control. That you can definitely say not required. Okay, so what do you cut down? You will cut down on tests of details. You will cut down on tests of controls. Okay, so these two definitely you will cut down. But to say that the auditor will only perform the inquiries is incorrect. Inquiries will be performed, and along with inquiries, so let me just add this. What will he do? Substantive analytical procedures. So these two auditor will do. See, objective is not to just go ask questions, come back and issue the report. No. Then the review is also not performed. Because if you are asking questions, filling the checklist, and you are saying your job is done, that is incomplete. That is not review. In case of review, you are required to perform inquiries, and you are also required to perform substantive analytical procedures. Once you are through with both, that's when your review is completed. Okay. Now the point is that auditor is required to perform maybe two categories broadly of procedures. So this is one, this is second. In this case, what has happened? While the auditor was performing inquiries, or on the basis of inquiries itself, auditor came across some material misstatements. Now, how should you deal with that? Of course, the moment you come across any material misstatement, what do? See, because it's based on inquiries, so that's why auditor will have to corroborate that is it really a material misstatement or not? Yes or no? Because so far only the inquiries have been performed. So auditor will have to corroborate through evidence. So auditor will have to look through those details. Now he may have to go beyond analytical procedures. Yes or no? So that's what we discussed, that it's not really limited to that. Of course, if that is required anywhere, he may have to go beyond that, and that's how he'll be able to conclude. Right? Right? So auditor needs to conclude on this, and any additional procedures which are focused on obtaining evidence on the basis of which conclusions can be drawn, auditor will have to now form that, including the substantive testing. But that doesn't mean it will extend to all the areas. It will be limited to that particular area. Otherwise, he'll move on to audit. So the idea is not to change the scope completely. Idea is to just ensure that he has got enough evidence. Why? Because on that basis, he'll have to report. Okay, whether it is clean report or modified one. Clear? Clear on this?
Yes.
Yes,
Any
sir. Clear,
questions,
sir.
any doubts? If you have, please ask me up, because I can see some gaps in terms of your understanding of review analytical procedures. So that's why it's very, very important. Keep asking questions. Okay. Next. During the review of quarterly results of a company of which you are the auditor, it is gathered on the basis of inquiries. Means you would have understood that there's been a major fire in fabric processing plant of the company during the quarter. It has resulted in massive disruption in the operations of the company. Worse still, machinery and inventories of the plant were uninsured due to carelessness of concerned staff, leading to substantial losses. The matter has been disclosed in interim financial information appropriately. Now, please understand interim financial information. In this case, how will you deal with this in terms of your review, in terms of the reporting requirements that you will have? Over to you.
Sir, in this case, is clearly is that the machinery and the inventories are not insured, uninsured,
Right.
and totally that the destruction that it will impact the going concern assumption. The thing is that since the fire is very huge and the management is not is uninsured, the thing is
Right.
that the company has to bear the losses,
Right.
and SRE 2410 will be applicable.
Okay.
And as this is a case, the auditor will inquire and other review also. Other review means as the analytical procedure and desktop details also, he will go and deep dive into that. And
Okay.
when there is a material uncertainties, if he found,
Right. Right.
and this is definitely the significant impact on the going concern.
Right.
And although the company already disclosed the interim financial information is disclosed appropriately,
Okay.
the auditor also his as part of his reporting, which means the interim financial information, the auditor will modify his review, the
Okay.
conclusion.
Right.
What I'm saying conclusion. See, generally, whenever we are giving that audit report, he will
Right.
put into the separate paragraph, the separate section called material uncertainty related to going concern. But here, he will not include that things. He will add the emphasis of matter paragraph. In
Okay.
that, he will modify his review of the opinion, conclusion.
Okay. What about others? Anyone else? Your thoughts on this?
Sir, adverse conclusion to be given since it is a material thing to the company.
Okay, but why do you think it should be an adverse conclusion?
Because its impact is pervasive.
Okay, because its impact is pervasive. All right. Anyone else? Quickly. Tell me quickly. Tell me quickly. No? Okay, so now in this case, there's a massive disruption in the operations of the company. Okay, and which have resulted in significant losses. Why? Because insurance is not there. So the situation is such that it may cast significant doubt about the going concern assumption. So we can say that there is a material uncertainty as around the going concern. But here again, I think you need to draw the inference from what we discussed in case of going concern auditing standard. See, first thing is to say that the going concern assumption is inappropriate. Yeah. The moment you say that the going concern assumption is inappropriate, so what do you need? You need the financial statements or the financial information should be prepared on realizable value basis.
Yes, sir. Liquidation basis.
But can we say that in the given situation? We don't know. But it doesn't appear to be that like that. Of course, there are losses, but to say that company will now come to an end, we don't know. Okay, the fact pattern at least doesn't talk about it. But one thing is very clear, that even if the company doesn't come to an end, they will be facing significant problems. So material uncertainty is definitely involved. Now comes the question that if the material uncertainty is involved, then is that appropriately communicated to the stakeholders? So how will the company do that? By disclosing that. So is that disclosure appropriately given? Answer is yes. Answer is yes, it's appropriately given. Now, similar to that auditing standard, can we include a para for material uncertainty related to going concern? Answer is yes. But now this para, you'll not call it as material uncertainty related to going concern. You'll have to change the nomenclature. What do you call it as? Emphasis of matter. Okay, because emphasis of matter and that particular para are not different. Yes or no? They are similar because you are just trying to highlight that. Clear? So when it comes to a review, you will change the nomenclature. You will call it as emphasis of matter. Effectively, you will be writing the similar thing over here. Clear on this, everyone? Yeah?
Yes, sir.
And adverse opinion is something that you will get on to in two situations. One, either you will say going concern assumption is inappropriate. That's your conclusion. But the management is not agreeing to your view. So there is a disconnect. So you may decide to go in with adverse opinion, or the management is not ready to give the adequate disclosures. That's where you may say that there's a significant disclosure deficiency, and that's why you may consider adverse or qualified opinion. But in this case, it will not be the opinion, it will be the conclusion. Clear?
Yes, sir.
All right, so let's look at next one. CA Seerath is conducting review of quarterly financial information of a company of which she is also the auditor. Okay, so now she is not only the auditor, she also happens to be reviewer of this quarterly financial information. So you can say it's a listed company. Yeah, kind of, we can have that situation. So now say 1 quarter is required to be reviewed instead of audit. She believes it is necessary to make a material adjustment to the quarterly financial information for it to be prepared in all material respects in accordance with applicable financial reporting framework. She has communicated the same matter to the CFO as well as the audit committee, means TCWG. Okay, so there is a material adjustment which is bothering her, right? So there is a material misstatement, one can say. However, no response was received even after waiting for a reasonable time. What does it mean? Means management is not agreeing to what she is requiring. So she requires an adjustment entry should be made in the financial information. Management has a different view. In this case, what should she do? Over to you. What are the options available to her? Tell me quickly. What should CA Seerath do in this case?
Sir, since this is a material adjustment, she can
Right.
modify his report. That is one option is available.
Okay.
And another option, she can withdraw from his engagement.
Okay.
And also she is responsible for statutory audit. Also,
Yes.
she can resign from there also. See, this option is given in not only this, in this particular standard,
Right.
even the adverse opinion or disclaimer of opinion or qualified opinion, wherever they are not agreeing, the management, they
Right.
can straight away, the option is given, the possibility of withdrawing from engagement option is there.
Okay.
So in this case, she can do the modify the report, or she can think about the withdrawing from the engagement, and if she is continuing from that statutory audit, that also from she can resign from there and she can withdraw that.
Okay. Anyone else? Quickly, huh? Please. Anyone else? Any more thoughts?
No, sir.
So what are your thoughts then?
Then it's same, sir. It will modify the report, or otherwise it will withdraw or give the this.
Okay, great. So let's understand in this case, what are the options available to her? The first option and the most preferred option she should choose is to perform the job assigned. What is that? Modify the report. Okay. The other option which she needs to evaluate, which is not possible always. Now there again you need to have this clarity. See, to withdraw from the engagement is not possible always, particularly when it comes to the listed companies. The given example is not for the listed company, so you should not worry. I'm just trying to give you that understanding that when it comes to the listed companies, so therein the auditor may not withdraw easily. So there are some regulations of SEBI.
Yes, sir. We have a SEBI regulation on that.
Correct? So depending on those regulations, she needs to look at, because what is it that the regulator require? A regulator doesn't require the auditor to run away. What is the intent of the regulator? That if you find any problem, report that. Okay, so of course, the second option which she needs to evaluate. Now, please remember, in the exam, you need to write this language, she needs to evaluate. So that's why they are saying possibility of withdrawal. So you cannot write that she can withdraw. So that means it is always an option. So if you write that language, that is incorrect. Okay, she needs to evaluate whether she can withdraw or not, and whether she wants to therefore withdraw from the engagement by resigning if the possibility is there. Okay, so that becomes your second option, which is again is going to be second preference as well, but only if it is available. And again, if she will withdraw from the review, then definitely she will also want to withdraw from the audit. There's no point withdrawing from review and continuing as the auditor. Yeah, so that's quite a natural thing, which is sort of linked. Yeah, but again, that third part she needs to evaluate. And please remember, the thing which I'm just trying to highlight is this aspect. Okay, something which you need to be very, see in the exam, the language that you use. That is something which the examiner will get to know. Examiner is not there face to face with you, who will understand your thoughts. So your thoughts are communicated through whatever you write. So if you write that she can withdraw, so examiner understands that you understand that she can withdraw at any point of time. If you write that she can evaluate a withdrawal as an option, that is when you communicate that you're just trying to understand that possibility is there or not. Okay, so that's how you need to answer this. Clear on this, everyone?
Yes, sir. Yes, sir. It's clear, sir, that SEBI also the guidelines is given if the quarter is not completed, then
Yes.
if it is within the 45 days,
Right.
then they can withdraw it. Otherwise, that auditor has to give that quarter report.
Correct.
Likewise,
Correct.
if the 3/4 is completed,
Yes.
then if not with that cases also, he has to provide the prior quarter report as well as the current quarter report.
Correct.
And also he has to provide the entire report for the previous year as well.
Correct. And in this case, you need to understand the intent of the regulator. So what is the intent?
Yes.
Intent is that regulator wants you to report and not to run away. See, if you are withdrawing, so you are running away from your responsibility. So that is what the regulator doesn't want. They do not appreciate this. Okay. Clear?
Yes, sir. Here the possibility, the word is very important.
Correct. Absolutely.
Sir, if
So the
permitted,
possibility is-
then withdraw, we can write it.
Of course.
Permitted.
That is what you will have to write. Okay, because you need to check first of all. So now, CA Seerath, can she withdraw? No, she will have to check, can she withdraw or not? And if she can withdraw, that is when she will think whether I want to withdraw or not. So first of all, that option should be available. Yes or no? Only if the option is available, you will choose. Otherwise, how will you choose? Correct?
Yes, sir. Yes, sir. In this case, sir, we have to mention that in case of modified report, adverse or disclaimer is to be issued, sir.
See, adverse should not be there, because if you look at the fact pattern, it doesn't talk about the impact to be pervasive. So whenever the information is silent, you can always use the wording modification. That is what this material also provides, your study also provides, and that's always better. And if you want, you can always write that in your answer, that because the fact pattern doesn't clarify that the impact is pervasive or not. So that's why if it is pervasive, you will go in with adverse opinion or the conclusion. Otherwise, it will be qualified. Okay, that sentence also you can add. Okay, the idea is what you want to demonstrate your knowledge, but please remember that you should be demonstrating in a very concise manner.
Okay.
So you should not be writing paragraphs, essays. So that's again not something you should be looking to do. Clear?
Yes, sir.
Okay, next. CA Pankaj Chaturvedi has issued a review report dated 28th July 2024 for the financial results of a company for the quarter ended 30th June 2024. Describe his responsibility, if any, for the events occurring from 1st July 2024 till the date of review report in accordance with SRE 2410. Over to you. So now let me just put it down first of all in the form of this table. So we have this quarter from 1st April 2024 to 30th June 2024. Okay, so this is the quarter. Right now, I think the review report is issued on 28th of July. So the question is that for this period from 1st July till the date review report is issued, what are the responsibilities of the practitioner auditor who is doing this review? Over to you quickly.
Yes, sir. Here that SRE 2410 is applicable as well as the SE 560 subsequent event also is applicable.
Okay.
See, in subsequent event, if any subsequent matter is transaction significant is involved from the
Right.
1st July 2024 to till the date of report, the
Right.
auditor should inquiry should be given to the management whether in the significant matter is appropriately accounted and disclosed or not.
Okay.
Yeah, he has to inquire with the management. If there is a material impact, then he has
Right.
significant matter is there, then definitely he will, if not uncorrected, then he will bring into the report.
Okay. Anyone else? What do you do? Quickly, anyone else?
Yes, sir. Subsequent event should be disclosed in it.
Subsequent events to be disclosed. So how do you disclose that as an auditor? And where do you disclose that?
So when inquiry should be taken from management and all.
No, so inquiry is one, disclosure is another thing. Where do you disclose?
In the review reports, sir.
In the review report. So you will give a disclosure, is it? So what sort of disclosure will you give? Can you give me one example for this? Quickly, huh? Any
No,
example that comes to your mind?
no, sir.
Sir, say example, the sudden fire has happened. All the
Right.
material, say all the machinery and other things got damaged, and
Okay.
the insurance is also is not there. Then the
Right.
company has to bear the losses.
Right.
Definitely, it will impact on the going concern concept.
Okay. So in that
Yeah,
case, what do? You will include that in your review report.
but the thing is that if the management, we will inquire to the management is properly accounted and disclosure done, then also we will put it in the emphasis matter paragraph separately and we will inform that matter.
Okay.
If the management is not incorporated in their financial statement and is not disclosed, then definitely I will give the adverse conclusion on it.
See, there are two different things here. Huh?
Yes, sir. Two different things are there. Yes.
One is whether your conclusion is modified or unmodified. That's not the requirement of the question. Question
here-
is just simply asking you that as an auditor, what will you do in respect of this period? Okay, which is about subsequent testing, simply.
Sir,
As simple as that.
here I will simply write, the auditor will inquire with the management whether the management has identified all the events up to the date of review, whether that the inquiry adjusted and disclosed in the interim financial information or not. That I will check and ensure.
Yeah. So now in this case, what is the responsibility of the auditor? This period. Okay, so we have an accounting standard. Accounting standard talks about any event subsequent to the reporting date and to check whether that is adjusting or non-adjusting. Now, as an auditor, when you are doing the review, you need to ensure that accounting standard has been complied with. So how do you do that? You'll have to perform some procedures even on the period which is after the reporting date. That is
Yes,
what
sir.
you do in case of audit as well.
Yes,
Now
sir.
the
We will
only
go.
thing is that instead of performing the audit procedures, you will be performing the review procedures. So now what is the meaning of review procedures? Review procedures means, of course, you will perform inquiries. If at all you believe any sort of analytical procedures, you will do that. If at all you believe there is something important for which you need to go beyond that, means you need to check, you need to test, you need to verify, then you will go down that path as well. But that is something which is very, very limited in a done is sorry, that is done in a very, very limited manner generally. Yeah, because in case of a review, your scope is less. Okay, but do you cover this period? Answer is yes. Because if you miss out on this period, then definitely some sort of adjustment may get missed out to be recorded during this period. Now, does the auditor need any sort of disclosure around this? Obviously, no. Because even if this has to be disclosed, who will do that? Management. Because financial information is not the responsibility of auditor to prepare. Who has the responsibility to prepare that? It's the
Management.
management. So that's why to say that auditor will disclose, that is incorrect. Where will the auditor disclose? Auditor cannot disclose it anywhere. There's no option available. Auditor cannot just go and say that I'll prepare the financial results you set aside. No, he can't do that. Financial results is similar to financial statements only. Okay. Yes,
sir.
Ravi, you have a query? Yes, Ravi.
Sir, here SA 560 is applicable.
Sorry?
Sir, 560 is applicable, sir, here.
No, so see, SA 560 is about audit and we are looking at review. So that's why which standard you will check? You will check SRE 2410. But please remember that when it comes to a review for which you refer SRE, see, you need to definitely draw inferences from various auditing standards. Now, why is that important? Because SRE talks about review and dilutes your procedures. At the end of the day, because it's an insurance, so that's why your procedures are going to be there. The only thing is that you are not diluting your procedures. So that's why I'm saying something similar to what you will do in case of audit, you will also do in case of review. The only thing is that extent of testing, your type of procedures will be reduced. Okay, so you're just drawing inference from that for the purposes of your understanding because you have more clarity around that. You have done that, you've discussed that quite a lot. But the relevant standard for you is going to be what? SRE 2410. And you need not think about it. Okay, fortunately, in most of the cases, what I can say is that the question is providing you this information. Okay, clear? Are we
Yes, sir.
clear on this?
Yes, sir. Means I have to take inference, but not directly
No,
applicable.
so directly that's an audit standard, and now you're doing review. Okay.
Okay, sir.
Sir, in this case, even the auditor review report is issued and
Right.
the report is not published to the intended user. In
Yes.
between, if there is any subsequent event also, that auditor need to review whether the management has properly incorporated in the financial statement and disclosed it appropriately. That aspect also he should check it out.
Yeah, but see, as I have discussed with you earlier also, practically what will happen is the day financial results are signed, the same day review report will also be signed. Okay, so that's how you have the things practically, right? Clear?
Yes, sir. Yes, sir.
All right. Any questions so far? No? So then I think what we can do is we can take a break now. We are not yet through, so we'll just pick up some more questions on this. And of course, we need to pick up another chapter as well. So let's do that after the break.
Right, sir. Thank you, sir.
Sure. Ashok, we can take a break now. All right, so now what we can do is we can just move on to the next topic. Okay, so I plan to cover some more questions here. Yeah, but what we'll do is after looking at this chapter 11, we'll just mix up questions of both these, and that's how we'll discuss. Okay, moving on to the next one, chapter 11. So if you're referring the study material, you can just refer this chapter 11 now. All right, so now moving on to this next topic. So this is about prospective financial information or the assurance reports on controls at a service organization. I think we have talked about it in the past as well. Or the assurance engagements to report on the compilation of pro forma financial information, which is included in a prospectus. Now, all of these are what? All of these are auditing standards. You can say, or you can say all of these are actually assurance in nature, wherein you are doing some sort of procedures, and on the basis of the procedures, you are required to issue the report. Yeah. I think the important part in this case will not be again to understand as to what are going to be the procedures, because I'm sure you'll have a lot of clarity as around the procedures which are required to be performed and when are those required to be performed. I think the most important part now for you to look into will be about the understanding of what is prospective financial information, what do we have in case of controls at a service organization, or what is this pro forma financial information. Yes or no? So let's quickly talk about prospective financial information. Can somebody explain what is prospective financial information? Over to you. Tell me quickly.
Projection.
Projections. So what does it mean? If you can just explain this, elaborate on this.
Sir, the prospective financial information, which can be forecast, projection, or combination of both. See, in the case of the prospective financial information,
Right.
is based on assumption about event that may occur in the future and possible action of the entity with
Okay.
respect to the current financial statement.
Okay. Can you give me an example for that? What do you mean by that?
Sir, example, the financial year 1/4/2024 to 31st March 2025. This
Right.
is a financial year. It's actually the auditor reports is prepared based on this. The
Okay.
projection here, the prospective financial information means, say in this case, during the May, the company has purchased or invested in the subsidiary company. Say example, 100% subsidiary.
Okay.
See, what will happen? See, here in this case, the assumption about event that may occur in the future, this is a future
Right.
case.
Okay.
The possible action by the entity, which means
Yes.
if this particular transaction would have been occurred in the last year, then
Right.
accordingly, the company has to presume that this was happened is the earlier. Then it has to be adjusted accordingly in the 31st March closing balance sheet as well as the profit and loss account.
So I think the explanation that we have looked at so far is more, I think, suited to the third aspect that we are going to look at, that is about pro forma. Now, what is
Yes, sir.
prospective? Prospective is all about future.
Future.
Now, for future, if you are required to prepare the financial information as the management, for example, the bankers require for the next 3 years, what is going to be your profitability? What are going to be your cash flows? Many a times entity is required to provide the future information. See, there is one thing which is in respect of financial year which has got completed, on which the auditor will come and audit. Say 24-25 is the financial year. Year is gone, means it's a past or a history. So auditor will now come, check the financial information for this period. So that's why, what do you call it as? Historical financial information. Now, let's suppose 25-26 is going on, and the management prepares the financial information for 25-26. Can that be prepared? Answer is yes. Management may assume, because this will not be actual. So that's why, what will the management do? They will assume. Yes or no? They will have to assume. So what do they assume? They will assume that during the year, how much revenue they will be able to execute. Okay, what are going to be their expenses? So it's all related to future data, which will be all based on what? Assumptions. Or you can say estimates. So that is what you call as prospective financial information. Now, if that prospective financial information is required to be examined, if let's suppose the concerned person, let's suppose the banker says that this financial information for 25-26 that you provide, I want this audited. Okay, I want this reviewed by somebody. Means reviewed, I am just not using the terminology review that we just discussed. Means it has to be examined, it has to be verified. So that is where you go to SAE 3400. So what is prospective financial information? It's based on assumptions about the events that may occur in future. Right? Clear? So it's
Yes,
a
sir.
forecast, it's a projection, or you can say it's a big combination of both, but it's all about future data always. It could be for 1 year, 3 years, 5 years, again, depending on what the management requires. Means wherever it is required, what is it that they need to look into. Now, as far as the assurance is concerned, when it comes to the preparation of this information, who will do this? Management will do this. Can the practitioner prepare this? No. So what is it that the practitioner will have to do? Now in this case, the most important part, let's try to understand the most important part. See, the most important part in this financial information will be what? Can you tell me? What is going to be the most important, the critical part in this financial information? Tell me quickly. Let's suppose if you were called to examine, what is going to be the most important part that you will want to focus on?
So
So
the
how the
assumption,
assumption that management
sir,
is taken.
Sorry?
how the assumption and the estimation is taken.
Very good. So the most important part for the one who is going to check this will of course be the numbers, will of course be a lot of other procedures. So the planning, risk assessment, all of these things will also be done. But this entire data is based on what? Assumptions. So that's why important part is what? To understand and check those assumptions. Because if those assumptions are not appropriate, this entire data may go for a toss. Yes or no? Yeah. So in this
Yes, sir.
case, the critical element which needs to be focused upon and which will have the bearing on the entire financial information will always be the assumptions. So that is going to be the focus area. Now, as far as the procedures are concerned, the approach are concerned, all of those things will always remain same. As far as the audit procedures are concerned, so there are going to be a lot of procedures when it comes to the future information. So definitely some historical information must have been used. Okay, a lot of industry trends, economic environment, there are a lot of factors which would have been considered. But there again, as we discussed, the focus will always be on what? Assumptions. And here again, the report will be issued. Now, what is going to be the components, or you can say the contents? Title, addressee, identification of prospective financial information, similar to what you do for financial statement. Reference to the auditing standard, management responsibility. Okay, then of course the responsibility of the one practitioner, when applicable a reference to the purpose, which will generally be there. Statement that examination procedures include examination on a test basis, means again the approach will have to be explained. Statement of negative assurance as to whether assumptions provide a reasonable basis. Opinion. Appropriate caveats concerning the achievability of the results indicated. Then of course, date, place, signature, all of these things will have to be included, right? So that's about the prospective financial information. Now, let's look at this next one, which talks about assurance reports on controls at a service organization. Can you please explain what does this standard talk about? What are the controls? What is the service organization? Over to you.
It's about the outsourcing services. The organization has taken the services from an outside organization, like outsourcing of payroll services. So SA 402 is also there.
Right.
And in these standards, the assurance report has to be provided by the practitioner.
Very good. So I think, again, this is something you can say is a sort of continuation of what we have discussed about the service organization.
Service organizations.
Right. So service organization, you can say, is a third party in a way who is involved in a certain manner with your client. Let's suppose you are the auditor that's involved with your client, and that is where you need some sort of assurance on. So remember type 1, type 2 report we discussed, which the auditor will require. So when you have this type 1, type 2, some sort of those audit, some sort of those reports, so somebody will have to do something for that type 1 report, type 2 report. Yeah. So that level of assurance is something that you discuss here. Okay. Now, what is a service organization? I think we already know about it quickly. It's a third party organization that provides services to user entity. User entity means, let's suppose you are the auditor, that is your client. And your client is availing services, let's suppose for payroll from a third party. So this third party which is providing payroll services is the service organization. Your client, let's suppose, is A Limited and you are the auditor of A Limited. Okay. Now, in this case, why are these controls important? Of course, we have talked about it, that if the controls of that payroll services provider will be inappropriate, then it will have a bearing on the audit of the company A Limited. Right? Now, in this case, user auditor means the auditor of A Limited. Service auditor refers to a professional accountant who, at the request of service organization, provides an assurance report. So now the auditor of A Limited is not involved in this. Auditor of A Limited is waiting for a report on the service organization. So who will provide that? Another auditor will come in, which you call as service auditor. Okay. Now, I think because it's about the procedure, so that's why some sort of reasonable assurance will have to be provided, and type 1, type 2 reports will have to be looked at. So good part will be to discuss a difference between type 1 and type 2. So when it comes to type 1, so service organization's description of its system, is what you will include in type 1 as well as type 2. In type 1, a written assertion by the service organization that in all material respects and based on suitable criteria, description fairly represents service organization system as designed and implemented at the specified date. Now that is where the difference lies. At the specified date. In type 2, you look at throughout the specified period. Okay. Then controls related to the control objective stated in the service organization's description of its systems were suitably designed as at a specified date. But in case of type 2, you look at throughout the specified period. Okay. And then of course, the final conclusion, or you can say the reporting which will go out. Now, in this final reporting, when it comes to type 1, so the service auditor's assurance report conveys reasonable assurance about the matters referred to in 2. Right? When it comes to type 2, so it conveys reasonable assurance about the matters referred to in this point 2 above and includes a description of the test of controls results thereof. So you can say type 2 is a more detailed one. Its coverage is more. Right? Now, when it comes to the engagement, so some sort of engagement formalities in a similar manner like you'll do for any other engagement will also be done here. In terms of the procedures, because it's all about checking of controls. So that's why an understanding the risk assessment, procedures around that, testing of controls, all of those things will be required to be done in a similar manner over here as well. Report. So now when it comes to the report, I think we have already talked about the report. Ravi, I'll just come to your query. Now just quickly look at the ingredients.
Sir, addressee will be the user entity.
See, addressee is meant to be again dependent on the scope that you have. Okay, it can be a user entity. Many a times it can be generalized that it's meant for anyone. Again, that depends on the scoping. Then you have this identification of service organization's description. Now again, depending on whether it's type 1, type 2, okay, some of these components you will include. Then identification of the criteria and the party specifying the control objectives. Statement that the report, description of test of controls are intended only for user entities and their auditors. Now this will become specific. Okay, so that's why what will you have? You will also have something which you provide only to a specific category of the persons. Anyways, this report is quite specific, meant for those persons only. Yeah. Then a statement that the service organization is responsible. So now, as around all of these controls, etc. Of course, service auditor will not be preparing that. Service auditor is there only to check. Yes or no? So that sort of responsibility in a way will be explained. And then of course the service auditor's responsibility will be explained. Right? Now, a statement of the limitation of controls and in case of type 2 report of the risk of projecting to future periods, any evaluation of operating effectiveness of controls. Then of course, opinion will be included. Now again, depending on the type that you have, you will include the opinion. Date of the service auditor's assurance report, which shall be no earlier than date on which service auditor has obtained sufficient appropriate audit evidence, which is quite generic. Yes or no? We all understand this. Then of course, signature and place of signature will be given in a similar manner. Okay. For type 2, I think we have already talked about it as to what are going to be the things. Now, if the service auditor concludes that service organization description does not fairly present in all material respects the systems as designed and implemented, controls related to control objectives were not suitably designed, controls tested, okay, did not achieve or they were not operating effectively. So what will the service auditor do? Give a modified opinion. So you can say it's similar to what you have in case of IFC, because now the focus is on control. So that's why you are looking at it from the control side, right? Then of course the documentation which has to follow. Ravi, you had a query? Yes.
Sir, my question is, sir, when type 2 report includes the information which has type 1, sir, then sir, what is the need of type 1, sir? That's my question, sir.
It depends on the scope, on the scoping. One is detailed, second is not so detailed. So again, one will have to go by the scope as to what is it that you are looking at. So you'll not say that I'll always want this one. Many a times the scope may be limited, so you do not need much of the things in respect of that. So that's why you can always go with that type 1 also. So again, it's on the basis of requirement, type 1 or type 2. Okay, so now let's move on to this third part, which is about pro forma financial information. So can you please explain what is pro forma financial information? Over to you.
Sir, it's about the financial statements to be included in the prospectus.
That's fine that this is included in the prospectus. But what is pro forma financial information? What do you mean by this? Why don't you have historical financial information? Historical is also included in the prospectus. So can we say that anything which goes in the prospectus is pro forma? Answer is no. So what is the meaning? What is the understanding that you have on pro forma financial information? See, I believe that when it comes to these three standards, the underlying which is required to be verified, examined, audited, it's very important for you to have a clarity on that. Because in most of the cases, what I've found is that this underlying which is required to be verified, okay, so students do not understand that. So if you do not understand what is required to be audited or verified, can you really think about the audit procedures? Answer is no. Okay. So what is pro forma? Now let's try to understand this. Now this is what Saminathan also explained.
Yes,
It
sir. I
refers
explain.
to
Yes, sir.
financial information shown together with adjustments to illustrate the impact of an event or transaction on unadjusted financial information as if the event had occurred or the transaction had been undertaken at an earlier date selected for the purposes of the illustration. Normally used in the offer documents to demonstrate the effect of a transaction on the financial statements of a company as if those transactions had occurred at an earlier date. This may take the form of statement of P&L, balance sheet, may also have notes to accounts. Now, I think what we can do is we can just pick up one example. With the help of that example, again, our focus will be what to look at as to what do you have in this pro forma financial information? What is the meaning of this? Okay. Once you have the clarity, then of course, as around the procedures, I do not find you will have any sort of confusion. Okay. So let me just share one file. So let's suppose company has a plan of restructuring. Let's suppose company is planning to, say for example, acquire, okay, let's suppose this B1, B2, B3, B4, B5. Okay. Now, what is their future plan? So it's a plan, okay, which the company plans to do. So to the stakeholders, company says that all of these will be sort of merged over here, right? Now, has it actually happened? No. So this is going to happen. So once the company will come up with IPO, the proceeds they will have, they will utilize that, and that's how this sort of business will be structured. Now, as an investor, what do you want? You want to look at the picture that if, let's suppose, this sort of structuring will happen, how is the balance sheet going to look like? How is the P&L going to look like? How the cash flow is going to look like? Or maybe you want to look at the financial statements. Once you have this thing in place, correct? But it's a future event. So now 24, 25 is gone. You were somewhere in 25, 26. And anyways, you are expecting this to happen sometime over here. So it's a future event. So has it already happened? No, it's going to happen in future. So you may be thinking then, sir, can we not have the prospective financial information? Yes, of course. But if the investor wants to assess that how the numbers for this period would have looked like if this sort of restructuring would have happened, then you are creating a pro forma. Okay. So you are doing all of those adjustments which you are planning to do in future in this period itself, and you are reproducing the number. So is it an actual transaction? No. So that's why it is called as pro forma. It's called as pro forma. And for this pro forma, you may have a financial statements which is complete, or you may have financial statements which are condensed, again depending on the requirements. But we are not looking at those requirements as to whether that will be complete or condensed. We are going to audit that. Okay, so I'm just hoping that this part as to what is a pro forma financial statement is clear now.
Yes, sir.
Yes, sir.
So now, can you tell me that if, let's suppose, you were to verify, examine this, okay? So in that case, what is going to be your focus? How are you going to approach this sort of examination? Where is it that you are going to focus more on? Something that we discussed in case of prospective financial information, that your focus will be more on what? Your focus will be more on the assumptions. So now, in this case, what do you do?
Sir, actually, the responsibility to compile that pro forma financial information for the entity. Entity
So
only.
let's not talk about what is the responsibility of the management. So
Okay.
my question is very pointed, and that's what I keep telling you on. So you need to be very specific to the question. So what is my question? What is it that the auditor needs to focus on? So why are you jumping onto the management's responsibility? That is not the requirement of the question. So if you answer that, so I'll be worried that are you clear? Are you Are you just trying to just take me away from the subject because you do not have the knowledge? So if you draft your answer like this, so that is something you should not do. You should be very specific and pointed that this is what you require and this is what I am answering. Okay, so let's be on the subject and answer this. Clear? So
Yes,
now,
sir.
as an auditor, what do you do? Tell me. Quickly.
So we will illustrate the impact of this transaction after doing adjustment and all.
No, so what do you mean we will illustrate? What is the meaning of illustration?
Means adjustment and all after doing that. What is the impact of this transaction after that?
No, so are you trying to say that you will prepare that? No, you are the one who is going to verify this.
Yes, sir, I understand that.
Correct. So
Yeah.
that's why you will not be involved in the preparation. Yes or no? You will not be involved in the preparation. So
Yes.
you will, of course, be involved in the verification, or you can say examination. So what is going to be your focus area? See, in this case, what is the different? Different is the adjustment. Correct? Which is going to change the numbers. So I can see this response coming from Mancha. Mancha, can you please explain? Adjustments. So you have written something. So what do you do? What do you focus on? Very good. Yes, Mancha, if you are around, if you can explain. Okay. So
Sir,
of course, it will be the
sir,
adjustments.
yes, sir.
Yes.
Practitioner responsibility, the performing the procedure to assess whether the applicable criteria used in the compilation of the pro forma financial information provided is a reasonable basis for the presentation, significant effect and event of the transaction.
Correct.
It is our it is our main responsibility.
Correct. It is your main responsibility, and this is going to be your focus area. Why? Because what is so unique? You can understand through the nature that pro forma is a different from what you generally see in case of any financial statement. So what is that different part? So of course, as an auditor, you will be focusing on that part. That doesn't mean you will ignore the other things. But I'm saying, of course, this is going to be the basis because this will change the entire numbers. Correct? Clear?
Yes, sir.
And then, of course, again, depending on your opinion, whether this is modified or unmodified, you'll have this report, which will have some sort of similar requirements. So now what I'll do is I'll just move on to the questions. I think through questions, we can have some more clarity and we can have some further discussion. So let me just get on to those questions now. Just a minute.
Sir, in this standard, what will be the applicable criteria, sir?
What do you mean by what will be the applicable criteria?
Means how the management has complied the financial. So there may be some criteria not. So, sir, what will be the criteria, sir?
So they will have to specify what is the criteria. That will again be based on the adjustment that they are planning. Okay, so every time the management will have some plan. What is the adjustment they are looking at? So that's what they will explain. That this is what they have done. This is what they have considered. Okay, that basis and all they will explain, and that sort of structure. Okay, that sort of adjustment, the nature of that adjustment, that will also be explained. Okay, but when it comes to the offer document, prospectus and all, so these are very common things which are done, and therein a complete description of that adjustment will always be given. Okay.
Yes, yes, sir.
Okay, so let's look at this. A company has approached CA Hemant for an assurance report in respect of prospective financial information of a project. on going through the project details, it is noticed that depreciation reflected on proposed fixed assets to be acquired in the prospective financial information has been calculated in accordance with Income Tax Act. No disclosure is made in this respect too. So tell me, how would you deal with this if, let's suppose, you are the practitioner? Over to you. How will you deal with this?
Sir, the examination of prospectus financial information, SCA 3400 will apply to this.
Okay.
See, the thing is that this is a prominently whether the assumption and the estimation is properly measured and accounted or not, we will verify it.
Right.
The thing is consistent basis, not the
Right.
historic. Yeah, it is the appropriate accounting principle. The principle should be followed in the consistency way.
Right.
Say example, if the prospectus, the thing is prepared for the 5 years.
Right.
2 years they following that one principle, and another 3 years is following for the another principle. This accounting policy is not appropriate.
Okay.
The consistent way. See, in this case, the company, the historical financial statement are prepared. The thing is that they need to prepare the company's act.
Right.
In this case, they prepared the depreciation as per the Income Tax Act.
Okay.
Which is not a proper.
Okay.
So in this case, definitely auditor can give the qualified opinion. Or he can possibly think about that withdrawal from the engagement if possible.
Okay.
I say I am incorporating the possible word specifically because
yes,
because
that's
we
a
discussed
good learning, isn't it?
Yeah, it is a good learning for me because we discussed lengthy on these particular things.
Correct.
So
and that is where you may lose marks at times, even though you have the knowledge of the subject, but just because your choice of words is not appropriate.
Yes, sir. Yes, sir.
Okay, that may just give a complete different understanding to the examiner, isn't it?
Yes, sir.
All right.
Here the company is presentation and disclosure is not adequately done by the company. Right. So the auditor can think for the following options. He can modify the report, or he can withdraw from the possibility of the withdrawal from engagement as appropriate.
Right.
This is what my answers.
Okay, great. Anyone else who would like to add to this? Or any different thoughts if you have? Quickly. Anyone else? No? All right. So now, in this case, when you look at the historical financial statements, they are prepared considering the requirements of Companies Act, and depreciation is calculated basis that. However, in the given situation, depreciation has been calculated using what? Using the rates prescribed by income tax. So is it proper? Definitely the accounting principles should be aligned. How can you change the accounting principles? So that's where auditor will have to evaluate that. He will discuss that with the management, ask the management to rectify. If that is not done, then again he'll have to think through as to whether he wants to modify depending on the materiality involved, and if that is modified, whether it's going to be a qualified or adverse opinion. Okay. Next, Bansi Group is a leading institution running prestigious postgraduate courses in the field of management. Its financial statements are audited by an independent auditor. Before the start of this academic session, board of the institution had outsourced its entire process of inviting student applications, submission of applications, collection of application fees, including late fees, etc., to easy solutions. Auditors of Bansi Group want to be sure about the design and operating effectiveness of controls at Easy Solutions Limited. What should be the nature of report to be provided by auditors of Easy Solutions Limited, specifically for use by Bansi Group and its auditors in this regard in terms of SAE 3402? I think here again the question has sort of, assisted you. Means the standard is referred in the question itself. Tell me, over to you. So in this case,
see, actually, there are, with respect to service organization, there are two reports are available, type 1 and type 2.
right,
And type 1, it's talk about the design and description with respect to the on the specific date.
right,
Type 2, it talks about the design and operating effectiveness of control of organization for the throughout the period.
right,
But in this case, is particularly they are talking about the entire process of inviting student application, submission of forms, and collection of application fees, including late fees and matter of all these things.
right,
The design and operating effectiveness of controls they are talking about.
right,
Though the appropriate report will be in this case type 2 report.
okay,
Because in this report only provide the description, design and effective operating effectiveness of internal control of the service organization.
all right,
So such a report is giving assurance on this matter.
okay,
They can also include the details of test of control as well.
okay,
If there is any deviation in that, they can include that as well.
all right, great. Anyone else? Anyone else quickly? So let's look at this. See, the auditors want assurance around what? Design and operating effectiveness of the controls. So clearly, it's a case of a service organization. So type 2 is the report on the description, design, operating effectiveness of controls operating at the service organization. So that is what will be required. Okay. Next. Management of S Limited requests you to accept an engagement to report on compilation of pro forma financial information to be included in the prospectus. In light of, again, auditing standard, standard is referred. What factors will you consider regarding the company acknowledging and understanding its responsibility in this matter before accepting the engagement? Over to you. So let's look at this. Let's try to understand this. See, the company's responsibility has to be acknowledged for the following matters. Adequately disclosing, describing applicable criteria. Of course, compiling the pro forma financial information, providing the practitioner with access to all information, such as records, documents, any material which is relevant. Okay. Additional information that the practitioner may request for the procedures. Yes or no? Access to those within the entity and entity's advisors from whom practitioner determines it necessary to obtain evidence, which is again relevant. When needed for the purposes of engagement, access to appropriate individuals within the acquiree in a business combination. Right? Why is this information required? Because that's how the practitioner will get a clarity of the transaction. And only then he will be able to sort of perform procedures on the adjustment which has to go on the basis of which pro forma will be prepared. Correct?
Right, sir. Like understanding the business and its environment, like that we have to understand on the what the responsibilities of that company for the preparation of it.
Exactly. Exactly. See, this answer is quite generic. So even if you compare this to audit, so there again you will have a lot of responsibilities which the auditor will always specify are there on the part of the management. So in a similar way, you'll have to just think about it. So I think I have this response from Mancha. She says that it's similar to SA 210 requirement. But what is that similar to? Can you please elaborate? Yeah. Anything that you want to add to this? All right. So let's look at next one. Huh? So now we'll look at this case scenario. Okay. Below is the given draft text of report on examination of prospective financial information. This is for a company. So please understand it's a prospective financial information for a company, Topaz Limited, in relation to company's upcoming project prepared by a staff member in a CA firm unfamiliar with drafting such reports. The report has been drafted in a casual manner and may consist of omissions and errors. So I think you'll have to look at this report carefully because that is what you'll have to find out. So let's go through this report once. Okay. If you want, you can just also refer the study material because you'll have to keep referring to this sort of information because we'll have questions based on this, right? It's addressed to the board of Topaz Limited. So it says we have examined the projection of the upcoming project to come up at Ratnagiri of Topaz Limited for the period from April to March 2030, April 24 to March 2030. Sorry, as is given in the prospective financial information from page 1 to 250 in accordance with SAE 3400. Okay. Preparation and presentation of the projection is the responsibility of management, has been approved by Board of Directors. Our responsibility is to examine the evidence, supporting the assumptions, excluding the hypothetical assumptions, and other information in the prospective financial information. Projection has been prepared using a set of assumptions that include hypothetical assumptions about future events and management actions that are not necessarily expected to occur. We have carried out our examination of prospective financial information thoroughly. Further, in our opinion, the projection is properly prepared on the basis of assumptions as set out in note number 1 to 50 to the prospective financial information and on a consistent basis with the historical financial statements using appropriate accounting principles. Even if the events anticipated under the hypothetical assumptions described above occur, actual results are still likely to be different from the projection since other anticipated events frequently do not occur as expected and the variation may be material. Okay, then of course it's signed off. So signature, designation, membership number that has been specified. Now in this case, so we have some questions. Okay, so once again I would just say that in case you want to refer, you can just keep referring to the study material also because that's where you'll have this fact pattern. If you want, I can just go back to the fact pattern every time, right? So let me just pick up all of these questions one by one and I want everyone to answer now. Yeah. whose responsibility is to list out assumptions underlying prospective financial information? Professional accountant who is issuing this report, auditor of the company issuing this report, management of the company, banker of the company. I think this is quite easy. Quickly.
Management of the company.
Okay.
C, option C.
Ravi is also saying management of the company. What about others? Quickly. Quickly.
So A,
Sir, option C.
accountant will give, no?
Option C. Yeah, of course.
No,
The
sir.
preparation. Option A. Who says A?
Professional accountant will assume. Geeta, sir.
Okay, you're saying professional accountant, is it?
He will give no report on this.
No, so it's not about report. It's about whose responsibility is to list out the assumptions. It will be the management, because the management will list out the assumptions. Auditor has to give the report,
Yes,
or the
yes.
practitioner has to give the report, not to list out the assumptions. Okay, clear?
Yes, sir.
All right, next. Which of the following statements is most appropriate regarding use of prospective financial information to be included in such a report? Intended use of projection is required to be disclosed. It is further necessary to caution the users regarding inappropriateness of projections for other purposes. B. It is discretionary to state intended use of projection in such a report. C. Intended use is required to be disclosed, not necessary to caution the users regarding inappropriateness of projections for other purposes. D. It is a prerogative of the management to use a report in the manner it deems fit. So tell me, which options out of these you believe is the most appropriate one?
Sir, I need one clarification. What is the option number D? It is prerogative of management to use the report of manner it seems to be. What it means, sir?
Means it's up to the management that the way they want to use this report.
Oh, okay.
How
Sir,
they want to use it.
okay.
That's up to the management. That's what it wants to say.
No, that is not appropriate. Sir, option A is correct, sir.
All right, let me just see what others have answered. Ravi is also going with A.
A, sir.
Then I
A.
think Mansha is also going with A.
Option A, sir.
Option A, very good. See, very clearly D is not possible. Okay, B is not possible. I think the only confusion they have tried to create is between A and C.
Yes, sir.
Yeah, this first part is very clear. Now the point is that is it necessary to caution the users regarding the inappropriateness? Of course, yes. So that's why it has to be A, not C. Next.
And also somewhere I think I read that the distribution and the use also it's restricted.
Yes.
Only for the specified user.
Correct. Now, next one. Which of the following statements is most appropriate regarding examination of prospective financial information by a CA in accordance with SA? Accuracy of projections is vouched for based upon performing procedures thoroughly. Projections can go haywire. To vouch for accuracy of projections. Accuracy of projections is not at all vouched for in an assurance report on prospective financial information. Matter of accuracy of projections or otherwise is not the domain. Therefore, there is no reporting requirement as such. Over to you.
Sir, I go with the option number C, sir.
Ravi is asking, sorry, Ravi is saying C. Saminathan also says C. Yeah, so here again, very clearly, accuracy of projections is not at all vouched for in an assurance report which is about prospective financial information. I think Mansha is also going with C. Mansha, when you are asking about this, you didn't see. Whenever you have this assurance, that's where you have the UDINA. Okay. Okay. Next question. Which of the following statements? I'll come to your query. Let's get done with this. Which of the following statements is most appropriate regarding UDIN in the context of this examination of prospect? I think I have answered this, but again, let's look at this. It is mandatory. Option B, desirable. Option C, not required because it's not audit. D, not required to state UDIN in such type of reports because it's not an engagement related to historical financial information. I think I have already answered this. So that's
yes,
why.
Sir. Yes, sir. Option A, sir. A.
Option A. Option A. Yeah. Because the moment you say it's an assurance, so what will happen? UDIN will have to be included. Right?
Right, sir. Sir,
yes.
my query is that on the point number 3, question number 3.
Yes.
In section B, the projection can go haywire. What is meant by this, sir? The projection can go haywire means?
Let me just get on to this option. Projections can go haywire means a lot of changes may occur. So they may go anywhere. Okay.
Okay. There? Right, sir. Right, sir.
All right. So now let's Now, practitioner shall not accept the compilation engagement unless the practitioner has agreed to the terms of the engagement with the management and the engaging party if that engaging party is different. In view of the above, mention the responsibilities of the management to be agreed for. See, the practitioner shall not accept the compilation engagement unless the practitioner has agreed to the terms of the engagement with the management and the engaging party, right? So again, in accordance with that, what are going to be the responsibilities? That will be about the preparation, design, implementation, accuracy, some sort of these things you'll have to look at. Okay, so then I think I'll just look at some questions. Okay, so now just give me a minute. Let's look at this one now. Mr. Vineet, an auditor, has been approached by QUB Limited to examine prospective financial information of that company. What factors should an auditor consider before accepting an engagement to examine prospective financial information, and under what conditions should the auditor decline or withdraw from such an engagement? Additionally, what steps should be taken to formalize the terms of the engagement? Over to you. Okay. So first, what factor should an auditor consider before acceptance? That's one.
Okay.
Number two, under what conditions auditor can decline or withdraw? Number three, what steps need to be taken to formalize the terms? So there are effectively three questions here. Over to you.
Yes, sir. That before accepting, he will think about what is the intended use of the information.
Okay.
whether that the information will be used by the general or limited distribution,
right,
and what are the assumptions, the estimation policies and the hypothetical assumption, what they considered while they preparing that projection, and also that what are the elements they used,
right,
and which period they covered it. Say example 3 months period or 1 year period,
right.
like that they can consider it.
Okay. And second question, what condition should the auditor, under what condition should the auditor decline or withdraw?
When the here we are talking about only the assumption and the preparedness. If the
Correct.
prospective financial information is inappropriately prepared, so assumption is not clear, the
Okay.
consistency is not clear, like
Right.
that,
Right.
the intended use is not as clear, he can
Right.
always think about the modification of the opinion,
Right.
or he can think about the possibility of withdrawing the engagement.
Right.
See, I am always incorporating the possibility now.
No, that is so important. So you will have to do that.
Yes,
If
sir.
you want
Thanks,
to score
Professor.
full marks. Okay. It's not a choice, isn't it?
Yes, sir.
Okay, so let's look at this. Let's look at all of these points one by one. So before acceptance, what do? Auditor will consider intended use of the information, whether the information will be for general or limited distribution, nature of the assumptions, again very important, elements to be included in the information, and the period covered. Yeah.
Yes, sir.
Auditor should not accept, or if accepted, withdraw when the assumptions are clearly unrealistic, or when he believes the prospective financial information will be inappropriate. Right? Now, to formalize the terms of the engagement, it is essential to agree on the terms with the client. And how do you do that? Through an engagement letter. Yes or no? Yeah. So
Yes, sir.
that's similar to any other engagement that you have. Okay. So now what I'll do is I'll just pick up one more sort of case scenario. Yes, Ravi, you have a query? Yes, Ravi. Yes, Ravi.
Sir, my question is, in this type of question, we have to mention some specific points, sir, like in this question or in the previous question one. So, sir, my question is, we have to learn, sir, all these points, sir.
No, it's not about learning actually, the way I look at it.
Just
I don't really want you to mug up all of these points, and that's what I just keep explaining, because if you can just understand, then I think this sort of concern will go away. Okay, because even if you look at some of these points, don't you find that to be quite generic?
Yes, sir. It is quite generic. If SA 210, if talk about
No.
agreeing.
So let Ravi answer, please. Ravi, don't you find these points are quite generic? See, the moment you will have the understanding of the information which is required to be verified, can you not think of some of these points? Ravi, over to you.
Yes, sir. Yes, sir. These
Yeah.
points, some points I can think, but not the complete, sir.
So which is okay. So see, that's where you need revision. That's where you need this writing practice. So you'll have two concerns, that I remember all the points, but the way these are required to be written, the language which is required to be used, I'm not clear on that.
Yes,
Okay. So to address first concern, what do you need? You need revision. Okay. The more and more you read, the more and more clarity you'll get, and you'll be able to memorize also. Again, the idea is not to mug up, but the more and more you read, automatically it's a kind of, sort of stays in your memory. So that's one. Number two, when you say that, no, I remember all the points, but the way it's required to be written, I don't know. So that's where you need this, sort of written practice, which will give you the complete clarity. Okay. Clear? Ravi, clear on this?
Yes, sir.
I think Sami, you had some point, Sami.
Yes, sir. Actually, the SA, the standard audit SA 210 is agreeing the terms of audit engagement.
Right.
Always there is generally it will talk about before accepting the engagement, what is the intended use of the information, what is the purpose, whether it's a general or limited, or what is the nature of all these pointers is covered before whenever we are before accepting the engagement. This is a
Correct.
generic point actually.
Correct. And there again, you'll call it as generic because you keep going through these requirements every now and then in respect of various topics that you cover.
Correct, sir. Correct, sir.
And that's, you can say, one sort of revision only.
Yes,
Yes
sir.
or no?
Yes, sir. And also based on that standard, we can modify that acceptance. Here the assumption is there, so we
Correct.
can put the nature of assumption.
Correct.
Here, there was in some of the standard, they will nature of estimation will be there. Nature of business is there. Nature
Correct.
of circumstances will be there. Like
Correct.
that, we have to modify our sentence. That's it.
Yes. So let's look at this now. Below is incomplete draft text of review report on the review of financial results of Fast Operations Limited, a listed company in accordance with SEBI regulations. Okay, review is a compulsory requirement, we all understand. Okay, so this review report talks about independent auditors review report on review of interim standalone financial results. 2xxx, we have reviewed the accompanying statement of standalone financial results of Fast Operations Limited for the quarter and 6 months ended 30th September being submitted by company pursuant to SEBI regulations. Statement which is responsibility of company's management, approved by board of directors, prepared in accordance with Ind AS. Then our responsibility so and so is sort of not explained. We conducted our review of statement in accordance with standard, okay, issued by ICAI. Then they are explaining about review, and again that detailed para is also included. Based on our review, then of course some sort of conclusion is included. Is using your knowledge, answer the following questions to complete the draft text of the review report. Now, if you look at the report, name of the addressee is missing. Now, who should that be? Over to you. So it should be addressed to audit committee, board, CFO, stock exchange.
Board of
Tell me
directors.
quickly. Tell me quickly. Board?
Board of directors.
Geeta says board. Yeah. Board of directors. Simple. Easy. Great. So it has to be board of directors.
Yes, sir.
Next. I think who has answered this? Mansha has answered this. Okay. So Mansha, you have some queries. I'll come to your queries also separately. Okay. Next. Under para 2 of the case study, choose the appropriate sentence beginning with our responsibility. So if you remember, under our responsibility, they have not completed that. So you need to complete that. Our responsibility is to express an opinion. Our responsibility is to express a conclusion. Our responsibility is to provide a reasonable assurance. Our responsibility is to express a compliance statement. Tell me, what is the responsibility?
Option B.
Sorry?
Option B, sir.
Option B. Very good. Because it's a review. So that's
It's a conclusion.
why what do you provide?
Conclusion.
Conclusion. Okay. Next. Given the description of the case study, which of the following engagement standards is most appropriate? Now this is important. SRE 2410, SRE 2400, SA 700 because it's a report, SA 810 because it's an engagement on kind of summary financial statements. Tell me, quite easy for you to answer quickly. Tell me quickly.
A, sir. 2410 interim.
A.
Sir, option A. Entry.
Option A. Why A? Because it's about review. Correct? Yeah, it's about review. of interim financial information.
Yes, sir.
Next, which of the following statement is most appropriate to be inserted in sentence beginning with a review is substantially? So when you explain the review, okay, so that's where which one you will find the most appropriate. So we have these detailed sort of pointers. Let's go through that. Review is substantially broader in scope than audit. I think I need not read further. B, review is substantially broader in scope than an audit. Again, I'll not read further. Review is substantially narrower in scope than audit, conducted in accordance with auditing standards, and consequently doesn't enable us to obtain assurance that we would become aware of all significant matters that might be identified in a review. Accordingly, we do not express audit opinion. D, review is substantially less in scope than an audit and consequently doesn't enable us to obtain assurance that we would become aware of all significant matters that might be identified in an audit. Accordingly, we do not express an audit opinion. Okay, so it's a good question. Which option do you select?
Sir, option D.
D,
Option D. Okay, what about others? Quickly.
Yes, sir. D, less scope.
So I will go with narrower.
You will go with narrow. I think Mansha is also going with C. What about others? Quickly.
Sir, D only, less scope.
D only. Okay. So if you look at option A and B, they are clearly gone out. Yeah. No thoughts about it. To say this is broader in scope is not possible. So let's remove these two. I think examiner is trying to create a confusion only between C and D.
Yes, sir.
Yes or no?
Yes, sir.
No.
Clearly, they are
It's
making.
not narrower. That's not the language that you use. It's less in scope. Okay, so that's why what is going to be your correct option? D. So if you remember the report that we also looked at, the same language is there. Okay, last one quickly for you. Complete the para 4 of the case study from the following options. I think we can, from the options only you'll get to know about it. Nothing has come to our attention that causes us to believe that the accompanying statement prepared in accordance with recognition measurement principles, other accounting principles, has not disclosed the information required to be disclosed, including the manner in which it is to be disclosed, and that it contains any material misstatement. Now, see, the problem with these type of options will be what? You'll have to go through this complete option because it's a detailed, sort of description. So you'll have to be very, very careful in the language whenever you come across such type of questions. Option number B. Now it will appear to be quite similar. So you'll have to just, make sure that you mark as to what is changing now. Nothing has come to our attention that causes us to believe that the accompanying statement, which is again prepared in accordance with accounting principles, which are listed down as amended, including the manner in which it is to be disclosed, or that it does not contain any material misstatement. So I'll just highlight some points for you. Okay, it does not contain any material misstatement. Okay, then C. I think C and D, if you look at, they are not using the negative language. So accompanying statement prepared in accordance with so and so, which is to be disclosed, it does not contain any material misstatement. But when it comes to a review, what language do we use? Negative language. So I think C and D, I need not read. So they are clearly gone out. Now tell me, even though it's more of logical, I'm sure, but I think some of you may have confusion. So which option you believe should be correct, A or B?
A. Yes, sir.
Sir, option A.
Option A, right? Option A,
Yes, sir. Yes, sir.
correct?
A.
Because you are using a negative language. So that's why
Nothing not.
it cannot be B. So the moment you say B, then in a way you are not commenting on this at all. So that will be incorrect, right? So that's why what has to be the correct option? Option number A.
Yeah.
Okay.
Yes, sir. I think you have shown one of the report
Correct.
having this sentence.
Correct. Exactly. And any review report that you'll have, it will always have this sentence, because this is the conclusion. Like in case of an audit report, you have opinion. So in case of a review report, this is the conclusion para. Okay. So all right. So I think with this
And
we
sir,
are through.
I have a query that it is not mandatory that the statutory auditor should be the reviewer.
See, again, it depends on the scoping. When it comes to the listed companies, when you are performing the reviews of the quarterly results, so that's where you'll always have the statutory auditor. But again, if it's a specific purpose, any special purpose information which the management prepares, that is where they need, they can always engage somebody else. Okay.
Okay, sir.
All right. Then I can see some queries coming from Mancha. Mancha, it will be great if you can just speak up, because there are a lot of points you have written. If you can speak, that will be great. Mancha, you are there? We can discuss quickly. No, so let's quickly go through the queries. So she's asking if the assurance is limited, do we provide UDIN? Can you please answer this question of Mancha? Quickly, over to you, everyone.
Yes, sir.
See if the
Yes,
do you
sir.
provide
Yes, sir.
UDIN? Yes. So
Yes, sir.
whatever is the level of assurance, the moment you say it's an assurance, UDIN is required to be provided. Okay, so then I think she's
Yeah.
asking, there are many situations where the auditor can withdraw. As per SA, it's a requirement. Do we have to list down separately? See, you'll have to list down again depending on the requirements. So if the question will ask you, then of course you'll have to list down. Otherwise, you'll not list down everywhere. Huh? That again depends as to what is the requirement of the question. Okay. Then I think Mancha, you need not unmute yourself. IT will do. I think Ashok, Mancha wants to speak. Can you please unmute? And we are through. So I think Karuna and Tanya ma'am are also there. So they are waiting for this quiz to start. So I think we can just move on to this quiz now. Okay. So thanks
Sir,
everyone for your time
sir,
today and
sir,
for this
one
wonderful
question.
participation. Over to you.
Thank you,
Thank
sir.
you, Achal. Thanks a lot. And good morning, dear students. As we promised, with small quiz, we are here for you. Not taking much of the time, we are starting the quiz. Yes, we have shared the link. You can join or you can share
scan.
screen share.
Wow, already wow.
पहले share screen
Share
करना.
तो हुआ मैं
Okay. It's yeah, scan the code. It's displaying on the desktop screen.
Yes. Muhammad Azman Sumit, they
Yeah.
joined.
You can join with any name. If you don't want to show your name, it's okay. But join faster because we are running short of time.
Yeah, but there will be scorecard also.
Yeah. So you can see what is your name. So accordingly, you'll be able to see your score. Right? Students who are on the YouTube or who are on the who have joined through the portal but not on the Zoom, they can also join. They can just scan the code and enter the join code.
Join my.
Ravi, you can also join. Swaminathan is there.
Yes.
Swaminathan,
Yes, ma'am.
please join the quiz so that we can start.
1 minute, ma'am. I'm joining it, ma'am.
Okay. Because it's already 10:07, na?
Seven,
Just scan the code
850.
and enter your name and joining code.
You can join through link also.
Hi.
We have shared in the chat box.
Yeah.
Could not connect to Vagrant. Please check your internet.
Okay, so we are just waiting for another 15 to 20 seconds, right? Else you can join in between. We'll start with the same. So we are able to see only 5 participants. You can also see your name. If anyone else wants to join, you can join in between. So then you need to take the help of the link actually. Saminathan, are you able to join? Yeah. So I think now let's start the quiz. Yeah. Tanya. So this is the first question. Lalit Private Limited, operating mainly in Europe, faced audit challenges in financial year 24-25. Despite proper planning, the team revised mortality and plan multiple times, causing delay, and the audit partner was not satisfied. What is the correct course of action in this case? We are having 4 options. Audit partner being the senior most member is right, and same thing should be considered by audit team by documenting it in the audit file. The option is audit partner is not correct as the audit team did the right thing. Third option is audit partner was correct. However, during the course of an audit, it required visits at various locations. It was mandatory. And fourth is audit partner is not correct because the materiality was revised by the audit team, which is a big thing, and same should have been considered by the audit partner. Only one of you has answered, and now it's 2, and time remaining is only 28 seconds. Now it's 27. So be faster. Your reading skills should be improvised. Mark the correct answer. Now time is indicating to close. 3, Sumit, Manchan, Samyanathan. Right. Time will be over.
3,
2,
1.
So you can see the dashboard responses. Geeta, Ravi, Sumit, Mansha, and Samyanathan, who do you all have answered, right? And the correct answer is audit partner's view is not correct as the audit team did the right thing, right? Because the question is Lalit Private Limited operating mainly in Europe faced audit challenges. He is operating in Europe, and despite proper planning, he faced audit challenges. The team revised mortality because mortality needs to be revised and planned multiple times, causing delay. So audit partner was not satisfied. So whether they need to revise the mortality and plan multiple times. So moving towards next question. Answer will be audit partner's view is not correct as the audit team did the right thing. They need to revise mortality and plan it because of audit challenges. Yeah.
Okay. Rohita and Company Chartered Accountants received a written order from the central government to investigate a client. The firm is considering expert assistance from certain matters. Can they seek such assistance? Yes. Rohita and Company should consider whether the assistance of other experts like engineers, lawyers, etc. is necessary in the interest of a comprehensive and foolproof examination of documents and information. Second, yes, SA 620 says using the work of experts has a specific paragraph on using an expert's assistance for investigation. Next, no, the objective of SA 620 is to use the work of expert for audit of historical financial statement and not for investigative purpose. And last, no, investigation is analytical in nature and requires a thorough mind capable of observing, collecting, and evaluating facts. The usage of the expert will hinder the independence of the investigator. So 25 seconds are left.
Read the options carefully. Until now, we have received only from 3 students, Ravi, Sumit, and Mansha. I'm waiting for the response from others.
10, 9, 8.
You can use elimination method also, or you can choose the correct option directly.
Stop.
So we can revisit the question that Rohit and Company CA received a written order from the central government. Now this is the question from the investigation chapter, right? Chapter 17. And firm is considering expert assistant for certain matters, because it is not possible that chartered accountant is expert in each and every field, or maybe who is doing investigation. So whether they can seek such assistance, so no will be eliminated, because of course they can use it. And now for the yes also we are having 2 options. One is SA 620, using the work of expert, has specific paragraph on using an expert assistance for investigation. That cannot be correct one, because the correct option is, if we see the most appropriate, best answer is yes, Rohita and Company should consider whether the assistance of other experts like engineer, lawyer, etc. is necessary in the interest of a comprehensive and foolproof examination of document and information, because CA need to determine whether it is required or not, whether they are able to do the same or not. So in the yes also, if we use elimination method, 2 options which are having no option will be eliminated. But then in yes also we need to choose the most appropriate. Of course, reference of yes SA 620 is there, but then the most appropriate answer is option 1. And who answered correct? Yeah. So moving towards next question. Correct answer, that statistics will be shown later, because right now we are running short of time, but this was answered by 3 students only.
Performance materiality means the amount or amounts set by the auditor at dash then materiality for the financial statement as a whole to reduce to an appropriately low level the probability that the aggregate of uncorrected and undetected misstatement dash materiality for the financial statement as a whole.
So you are having again 4 options: less, or higher. Then in the combination, again we are with the higher, we are having exceeds or falls below, right? So permutation combination of higher exceeds, less falls below, or higher falls below. Right now we have received only one correct answer, that is from the Sumit, and waiting for response from all other students. Omkar is saying something. You can join, beta. Link in the link we have given the chat, and again we are sharing the link. You can scan and you can join. So timing running short, and till now only Sumit, Mansha, and Samyanathan has given the answer, and this Omkar has also joined, I guess. He has also answered, but waiting from the Geeta, Ravi, Mohammed. So time is going to be over. Should I? So we have added time for you. Read the question carefully, that it is for the performance mortality, means the amount or amount set by the auditor at dash than mortality for the financial statement.
3,
higher than mortality or less than mortality. So time is over, and the correct answer,
we can see the score.
Yeah. So I think
3 have answered the correct.
Yeah. So answer is less and exceeds, means performance mortality means the amount or amount set by the auditor at less than mortality for the financial statement as a whole, or to reduce to an appropriate low level the probability that the aggregate of uncorrected and undetected misstatement exceeds mortality. So if the mortality level is low, the amount set for the mortality level is low, then definitely the undetected or uncorrected misstatement will exceed mortality for the financial statement as a whole. I hope it's clear to all of you. So moving towards next question.
While assessing the risk of material misstatement at an assertion level of MET Limited, CAK had an exception that controls pertaining to revenue are operating effectively. In particular, he expects that there exists robust control in company so that revenue of a company is not overstated or it is intended to place reliance on such controls. Which of the following statement is most appropriate? In the above situation, he should design and perform test of controls that provide him with more persuasive audit evidence. He should design and perform test of controls that provide him with less persuasive audit evidence. He should not design and perform test of controls, or he should design and perform test of controls in such a manner that shows their operating effectiveness at year end.
Till now, only Sumit and Ravi has answered, right?
40 seconds are left.
I'm reading the question again for you. You need to assess the risk of material misstatement, right? ROMM at assertion level. In the question, it's specifically about assertion level. CAK had an expectation that controls pertaining to review are operating effectively. He is having expectation. And he expects that there exists robust control in company, and robust control in company is also there. So revenue of company is not overstated.
Only 8 seconds are left. Answer fast.
Till now, only 5
Azman,
students
Nathan.
has answered, right?
Yeah.
Time is over, and
Mansha is on the top line
yeah.
till now.
And correct answer is, tell Tanya, correct answer.
Correct answer is first. He should design and perform test controls that provide him more persuasive audit evidence.
Right.
So two have answered correctly. Let's move on to next question.
Mr. Ram, Raj and Associate have been appointed as statutory auditor of Venus Limited. And this is during the year the company has entered into some related party transaction. Now SA 550 is in the picture. CA Ram, the engagement partner, has taken a management representation letter regarding the proper accounting, presentation and disclosure of such related party transactions. Is there any further responsibility of CA Ram with respect to the other procedures to be performed for related party transactions? Now we are having four options. One is no, no, and two are yes, yes. So no, there is no further responsibility of CA Ram as the best audit evidence for the related party transaction is the management representation letter. Whether it can be correct or not, no, there is no further responsibility of CA Ram as the audit firm is responsible for verifying the balance and disclosure of related party transactions. The identification of related party transaction is the responsibility of the management of Venus Limited. Two are of yes. So yes, the audit firm has the responsibility to perform the audit procedures to identify, assess and respond to the risk of material misstatement arising from the entity's failure to appropriately account for related party relationship, transactions and balances. And last one is yes, the auditor has the responsibility to detect fraud and error with respect to the related party transactions. Now tell me the correct answer. Till now only two students has answered. Three, Ta, Mancha and Omkar, right? So waiting for others. Ravi, Sumit. So 5, 4. Now time is over. So now Omkar is on the top, right? And correct answer is yes, the audit firm has the responsibility to perform the audit procedures to identify, assess, and respond to the risk of material misstatement arising from the entity's failure to appropriately account for related party relationship, transactions, and balances. And four have correctly answered. Yeah. Next question. If the use of going concern, very simple SA 570 based question. If the use of going concern basis of accounting in the preparation of financial statement is considered appropriate, but a material uncertainty exists and adequate disclosure about the material uncertainty is not made in the financial statements, the auditor shall. Which opinion auditor shall express? An adverse opinion or qualified opinion as per SA 705. Disclaimer of opinion. Express an unmodified opinion and include a separate section in the auditor's report under the heading Material Uncertainty relating to going concern to highlight the note disclosing the matter. Express an unmodified opinion and consider including an EOM paragraph to highlight the note disclosing the matter. Till now, only 2 students has answered, and very, very simple and basic question based on SA 570, where we have discussed that if the going concern basis is appropriate, but material uncertainty exists and advocate disclosure is not made. Disclosure is not made. What kind of audit report should be expressed by the auditor? Time is going to be over. Waiting for your response. Until now, we have only received answer from Sumit, Mansha, Samanathan, Ravi, and Omkar. Yes, Geeta has also answered. Only RR and Mohammad Ajman. 2 are remaining and time is going to be over. It's very simple, very basic question from the SA 570. Yeah. So now Ravi is on the top, and you all are aware of what is the correct answer for this. Tell Anya correct answer.
We will express an adverse opinion or a qualified opinion as per SA 705. 3
Why?
answered are correct.
Why?
Because material uncertainty is there and we have sufficient appropriate audit evidences also.
But we have not
made the disclosures in the financial statements.
Yeah.
Yeah.
Next question. It was very simple rather. CA Ram identified that there was a misstatement last year and the same is still not corrected. SA 710. I am indicating, but in the exam it should click in your mind. Although unmodified audit report was issued last year by CA Ram, guide CA Ram on the audit opinion considering the fact that the last year's misstatement has been identified in the current year and unmodified opinion was issued in the last year. We have 4 options in accordance with SA 710. CA Ram should give unmodified opinion but include other matter paragraph in the auditor's report as last year's profit is being reflected in the reserve and surplus. Next option is as per SA 710, CA Ram should seek legal opinion. Next option is according to 710, CA Ram should qualify current period audit report with respect to corresponding figures only. And last but not least, in accordance with SA 710, CA Ram should give unmodified opinion, but last period's modified opinion should be highlighted in emphasis of matter paragraph. So now tell me the correct answer. Which one is the correct answer? So what Ram can do? Whether he will give unmodified opinion but include other matter paragraph, whether he will go for legal opinion, or simply he will qualify current period's audit report with respect to corresponding figures or give unmodified opinion. Yes. So 5 students has answered and time is also very less. And we are also running short of time as we need to conclude also. Till now we are able to complete only 7 questions and we brought 10 actually for you. Yes, only 5. 3, 2, 1 and over. So rather than discussing on the responses, let's tell them the correct answer that as per 710, Ram can only do qualified current period audit report, but what about with respect to corresponding figures only? Corresponding figures means previous year's figure only. Next question. Yeah. CAR has accepted an engagement involving review of historical financial statement of an entity in accordance with SRE 2400. Nothing has come to his knowledge which could cause him to believe that financial statement could be materially misstated. In such a situation, which of the following procedure was unlikely to have been performed by CAR? Yes, inquiry about complex transactions, inquiry about suspected fraud, comparing financial information with prior period, or sending external confirmation. Very simple. And this is the last question as time is indicating us to wind up. It's already 10:28. Till now, only 2 students have answered. Means LVRC you have attended. I hope you have prepared notes and you have studied well also. Here we are talking about review of historical financial information. It means SRE comes in the picture. And it's given in the question also. But in this paper, there was a typographical error in May 25 examination that you were not able to identify. So it's very important you read the scope of work. The time is going to end. 6, 5, 4, 3, 2, and 1. So this is the last question which we have answered, and correct answer is to send external confirmations. R is accepted. Review financial information, review financial statement engagement as per SRE 2400. And he has come to knowledge that which could cause him to believe that financial statement could be materially misstated.
Only one could answer the correct.
Yeah. So now we are going to scoreboard. Yeah. So you can see.
First is Ravi, second is Uma Maha, and third is Mansha.
Yeah. So this is the result, and this way you can practice, and we are having group performance score also, right? So today we are at the end of the LVRC, right? LVRC is going to end. We have completed all the chapters with the help of questions, right? And concepts are being discussed with the help of questions. But of course, don't think time was short. We will be having more quizzes in the Success at CA exam series, which is going to commence at the end of July because the mock test paper series is approaching. So we will be there for you. And here you can see the session summary, your score, that what is your report card reflecting, but RR has not marked any answer, right? And Mohammed also has not marked any answer. But yes, we need to practice more. And for the MCQ case scenario part, I generally advise that in every day, at least 3 case scenario you should practice, because in the exam also you find 3 case scenarios. So this will improvise your reading habit, and you will be able to read the question faster, and you will be able to mark the correct answer. And please analyze, because in the booklet we have given the reason for the same also. So with this, not taking much of the time, I hope this LVRC was very useful for all of you. We thank Achal sir, Harshad sir, both of them took the all LVRC sessions. And we expect from you that you are studying hard, you are revising, at least 2 to 3 revision you are taking, and please practice mock test paper. In case still you find any difficulty, we are available for the open house query resolving session for auditing subject. It's always conducted on Wednesday 4 to 5 p.m. You can join the same. And of course, you can practice for the mock test paper, and series 1 is approaching. And after that, in the Success at CA exam series, it is for 2 hours generally. So for 1 hour, we will have this quiz. And in the 1 hour, we will having the tips, and for the successful, for the review of answers, how to present the answers, and discussion of the previous exams question paper or mock test paper. In case if you have any other doubt, you can also discuss with us for the same. And for BS mobile app you are having, and ask your query feature is there, which you can use for asking your queries. In case if any of your doubt is still not resolved, you can call us on 0120-3045-925, and you can share your query through ask your query feature. Further, your feedback is very crucial and very important for us to improvise the session. Okay, so your feedback is very important. Please do share your feedback and what you want to cover in the session. That is also very, very important. Further to inform you, BOS is also commencing its next live virtual class session from the 21st of the July for the CA final paper 3 advanced auditing assurance and professional ethics. So with this, I hope if you have any query, you can ask. Otherwise, wishing you all the very best for your exam. Will be in touch with you in the Success at CA exam series. Wish you all the very best. And for this session, Achal sir has guided you for engagement and quality control standards. And for the quiz, I'm Karuna Bhansali and Tanya was with me. So with this,
we ending the session. Thank you
Thank you.
so much.
Thank you
All the
so-
very best. Thank you.
Thank you, ma'am.
thank you.
Thank you, ma'am.
Yes,
Yeah.
yes. Thank you.
Thank you,